Hi, I'm Joseph Rand with HomebuyerTaxCredit.com, your leading resource for information about the homebuyer tax credit. So what's the marriage penalty? Well, it comes down to this. The homebuyer tax credit treats married couples very differently from the way that it treats unmarried couples. If two unmarried people are buying a home together, the IRS is going to determine their eligibility separately. So if, let's say, a boyfriend and girlfriend or just two unmarried people are buying a home, each of them are going to be reviewed independently. And if one qualifies and the other one doesn't, it's okay. The one who qualifies can get a full tax credit. If they both qualify, but for different types of tax credits, that's fine too. They can both claim a tax credit and they can share it in any reasonable way. Now that's very different from the way that the tax credit treats and the IRS is going to be treating married couples. And that's because the IRS is going to review a married couple's ownership history together. They're going to be testing it together so that they both have to be eligible. They both have to be eligible for the same type of credit and even for the same house. What do I mean by that? Well, we've counted up 4 potential marriage penalties in the homebuyer tax credit. The first is very simple. In order for a married couple to qualify for the homebuyer tax credit, they both have to be eligible. So if you have a husband and a wife, and the husband is eligible for a first-time homebuyer tax credit, and the wife is not eligible either as a first-time homebuyer or a long-time homeowner, well then, they don't qualify. Both partners, both married spouses, have to qualify in order for them to get the homebuyer tax credit. Now that's of course very different from the way unmarried people are treated, because if one unmarried person qualifies and the other one doesn't, the unmarried person who does qualify can get the full thing. So the second type of marriage penalty is when both partners qualify, both spouses qualify, but they qualify for different credits. Now this is really unfair because you have a husband who qualifies as a first-time homebuyer and the wife who qualifies as a long-time homeowner. If they were not married, they could both get a tax credit. If they each were buying individually and they weren't married, they could get the tax credit. But because they're married and because they both qualify but for different types of credits, their qualification cancels each other out. So he's a first-timer, she's a long-time owner, together they qualify for nothing. That to me is very unfair. That's the second type of marriage penalty. The third type of marriage penalty is when both spouses are longtime homeowners, but they're longtime homeowners for 2 different properties. The IRS is saying that both spouses have to qualify as longtime homeowners for the same property. So if he has owned a home and lived in it for 5 consecutive years out of the last 8, and she has owned a home and lived in it for 5 consecutive years of the last 8, but they're 2 different homes. Let's say they just recently got married. She owned a home, he owned a home. This happens a lot in our modern era when people get married later. They might already both be homeowners. They get married. They'd like to sell their 2 different properties and buy a home together. They can't get the tax credit because they don't qualify as longtime homeowners for the same property. That's the third type of marriage penalty. The fourth type of marriage penalty, and one that we're not certain of because we haven't gotten confirmation from the IRS on this as we make this video, is where you have a married couple where they've lived in a home that one of them owns for 5 consecutive years out of the last 8. So the owner of that property would qualify as a longtime homeowner, but it happens that only one spouse is actually the titled owner. So let's say that 10 years ago a couple gets married. The husband already owned a home, the wife didn't. They get married, she moves in with him. They've lived together in that home for 10 years. And now they want to sell it, buy a home, get the tax credit. They can't, we think, because although he, a long-time homeowner, having owned and lived in a home for more than 5 consecutive years out of the last 8, he's lived there for 10 years, she doesn't actually own the home. Now the reason we say that we're not certain about this fourth type of marriage penalty is because the IRS has made some statements that indicate that ownership by the husband would be imputed to the wife. Now they've made those statements in the context of actually disqualifying people, so we're not certain if they would use the idea of imputed ownership from a husband to a wife to say that even though the wife was not on the title of the property for the last 10 years, the fact that she lived with her husband who did own the property, would that qualify her as a longtime homeowner? We don't know the answer to that. For now, we're still calling this fourth type of marriage penalty one of the marriage penalties. So those are the marriage penalties. Now the question becomes, where did they come from? How did this marriage penalty end up here? It doesn't make any sense. Why would Congress write a law that so unfairly treats married couples when all we've heard for the last few years and all we've heard forever is how venerated the institution of marriage is? I'm married myself. I love being married. Being married is a wonderful thing. So why would Congress treat married couples so unfairly? Well, remember, there's 4 types of marriage penalties. The first type is when one spouse qualifies and the other one doesn't. Well, that marriage penalty has been in the law from the beginning. That's been in the law from April 2008 when Congress passed the first version of the first-time homebuyer tax credit, and they said very clearly that to qualify as a first-time homeowner, the taxpayer and, if married, that taxpayer's spouse have to be first-time homebuyers. So from the very beginning, the homebuyer tax credit has had that first type of marriage penalty in it. Probably not going to be changed. Now the question becomes, what about those other 3 types? What about the marriage penalty that comes up when both spouses qualify but for different types of tax credits? What happens when they both qualify as long-time homeowners but for different homes? And what if they would qualify but only one spouse was on the title? Well, these marriage penalties, believe it or not, come from a simple drafting error that Congress made when it revised the tax credit legislation in November of 2009 and expanded it to long-time homeowners and raised the income levels. What do I mean by that? Well, when they expanded the tax credit for long-time homeowners, all they did was create a provision that tracked the provision for first-time homebuyers. So the provision for first-time homebuyers that had been in the legislation since April 2008 that said to qualify as a first-time homebuyer, the taxpayer and, if married, the taxpayer's spouse have to be first-time homebuyers. Well, they did the same thing, Congress, when they wrote the provision for long-time homeowners. They said the spouse, or the taxpayer, and, if married, the taxpayer's spouse have to both qualify as long-time homeowners. Now, here's the problem. The IRS looks at the legislation and says we have one provision that says that both spouses have to be first-time homebuyers, or we have a provision that says that both the taxpayer and his or her spouse have to be long-time homeowners, but there's no provision that says that the spouses can be both, one be a first-time homebuyer and the other be a long-time homeowner. So the legislation was just sloppy. It did not provide for situations when they added the long-time homeowner credit. They didn't provide for a situation where somebody, there might be a couple, a married couple, where one spouse was already eligible as a first-time homebuyer, and now they were increasing the eligibility by allowing them also to qualify as long-time homeowners. So now you got a situation the IRS looks at and says, well, you got to both be first-time homebuyers or both be long-time homeowners. And if you're both long-time homeowners, you have to qualify for the same residence because that's the way the legislation reads. It's unbelievably sad that Congress wrote this legislation and just never considered the possibility that there could be married couples where they don't share the same ownership history, but they would both be independently eligible. So that's where it came from. Now the question is, what can we do to change it? With regard to that first type of marriage penalty, where one qualifies, the other one doesn't, there's nothing we're going to be able to do about that. That's been in the legislation for almost 2 years at this point. They're not going to change it. The question is whether Congress will revisit the November 2009 legislation and add a provision that allows that if 2 spouses would both independently qualify, then as a married couple they can qualify. That would take care of the second, third, and fourth types of marriage penalties. There is actually legislation that has been drafted by a member of the House Ways and Means Committee to change the marriage penalty and take it out of the law. Now we hope that does become law. What can you do to help? First, you can join our Facebook cause. We created a Facebook cause about a month ago. We have a lot of people who have joined. Join the cause. I don't know if that's going to make a difference, but it'd be good to keep a network of communication open. Second thing you can do is go to our blog, homebuyertaxcreditblog.com, and share your story. Congress is much more likely to act if they see just how many people are affected by the marriage penalty. We've had about 20 or 30 people share their stories on the blog. We've been updating it on the blog with updated posts which summarize the stories that people have given us. So feel free to come in and share your story. And of course, if you want to change this, contact your friends, contact your family, have them join the cause on Facebook, as well as contact your congressional representative, contact your senator. So we hope you found it helpful. As always, if you have any questions about the tax credit, you can come to our site, homebuyertaxcredit.com. But of course, before you make any decisions, you should check with your accountant. Hope you enjoyed the video. Have a great day. Thanks.